It was the 9th American rate hike in a row, taking the Fed funds rate to a range of 4.75 to 5%, the highest level since 2007. Now, there was a bit of an expectation it might have been 0.5%, but Fed Chair Jerome Powell said in the press conference that the recent banking turmoil is doing some of the Fed's work for it. The tightening of credit conditions that has resulted is worth at least one rate hike, he said, maybe more. And it looks like the banking turmoil is worth a rate hike or two here as well. From predicting at least 2 more RBA rate hikes just a month ago, the market is now predicting that there won't be any more in Australia at all, and that the next move will be 1 or 2 cuts in the middle of this year, followed by a pause. The bad news is, of course, that this means the market is also probably predicting a recession. The US dollar fell sharply when the US rate decision was announced this morning because it wasn't 0.5%. And as a result, the Australian dollar popped up to 67.4 US cents while falling against a stronger euro. The American share market closed 1.7% lower, but not because of the rate hike. It seems to have been mainly caused by Treasury Secretary Janet Yellen telling Congress that more blanket deposit guarantees like the one that bailed out Silicon Valley Bank aren't being considered. The share prices of small banks across America were smashed, dragging the whole market down. And that in turn dragged the Australian market down, with miners, banks and insurance companies leading the falls, and the All Ordinaries finishing 0.7% lower. And finally, gold and silver resumed their march upwards today, while oil also rose and iron ore fell. And that's finance.